Today was a range day with negative momentum, but the ES and NQ still gave some really nice clean setups. I'll break down whether pullbacks worked and what matters next. I'll also show you a way I messed up on today. I was trying something new for it, but it did not work out, and I'll talk about here in the ES. So starting out here with the ES, S&P 500 for May 26, 2026. There's a lot of colors on here using the previous day's Fibonacci tool on there, so I'm gonna go ahead and hide that, and we'll just use the Fibonacci tool to show how this one worked today. And one thing I'm doing moving forward now is for the previous day's Fibonacci levels, they have to be clean. What I mean by that is like the price couldn't come down and hit it, and then it just kind of ranges around, and even maybe if it completes it and then the news day starts right here and then try to pretend like it's fresh. I'm not going to do that anymore because I was doing a lot of back testing last night and it saw that there were times when the Fibonacci levels from the yesterday's low to high or high to low, when you draw them on the current days, there was a couple of times when I found out that they did not work, where it would just slice through them. But the only times they did not work were times they had already been utilized or it already been worked. So moving forward, what I'm doing is it has to be a fresh level like this one was today for the S&P 500. So going back to yesterday, here's the low, there's the high, there's that big gap we have. We still have a fresh level that this box signifies from 2 days ago right there. So when the market opened right here, I put this on so I could remind myself to talk about it. So it came down, hit the 38%. Never hit the 23.6, came all the way down, hit the 61, never hit the 38.2, and then finally hit the 76 level. So next it moves just below the 0.447 level, and then price went up, hit that for a nice little gain right there for that one. And then this, what I was doing over here for this one, well, here is a short right here. So we have, since we have the high up here and we see we're making low, there's a new low right there, and we haven't gone back and made a high up here yet. Today was definitely a down day here, even though the price ended up, the momentum was down from where it started, and so we're all going down right there. So we take the short right there all the way to right there. But then what happened was, this is also a short that I missed out on. This one right there was also at 5:30 in the morning. There is the new low right there. So we go and we hit the 38% right here, and then goes down, hit the 23.6 for a nice little gain. And then for this setup, this is where I lost it was a good nice little lesson learned for me today. So what I was trying to do was I was looking at saying, okay, if the slow EMA, the 610, and the 89 EMA, the fast one I use, if they're stacked up like that, then we'll look for longs, since the red is above the blue right there, the fast is above the slow. So I said, well, I think I'm going to start using the same type of rules and just using it from the next symbol for it. So I started doing it right here, and so I went up right here, but as you see, went down, never hit it. Here's 61, never hit 38, all the way down, stopped at the 1.146, and look, it would have eventually worked over here, but I don't like messing with that too much. So maybe that will be one of the rules, because when it starts going down this low, I usually just take a loss right there. I don't have an automatic stop loss in there. I do get out on trades when I know I've done something wrong to it, and so I felt like I've done something wrong, so I got out right around down here. But as you can see, that was the wrong way because it went up and would have worked, but hey, lesson learned. So I'm gonna start looking at this more, but right now I'm not going to take that one anymore. But then moving forward, we had another short setup here right at the end of the day, and this one is actually going to be live when the market opens back up here in 50 minutes. You can see there's the low of the day. So price came up, hit the 38%. There's the entry, and the right before the market closed, I got out right there, just so I didn't have to hold a contract overnight for it. And so yeah, that was that one for it. So then for the rest of the S&P 500, we are not going to use the today's pitchfork, or not pitchfork, the Fibonacci levels going into tomorrow, because as you can see, this one from the high to the day low is already in a trade right there. So when the market does open, if I can get into it when it pops back up here, I'll try to get back in and take it down to 23.6, or the other levels I have on there, where if it hits the 61.8, the exit moves to 38, but if it hits 76.4, then the exit moves to the 0.447 right there. But right now the exit's to the 23.6 for it. So that is the live trade that is currently set up, but outside of that, there isn't a trade to look for. And then going into tomorrow, we will still be looking for more movement down here in the market, because we still have two untouched Fibonacci levels from previous day's levels. So what I will be looking for going in tomorrow for the SP 500 is coming down over here, looking to go long at 75.02 to kick off the first trade setup for that one. But if price doesn't go down there and moves up tomorrow, then we'll definitely be looking for that one. Now moving over to the Nasdaq over here. And the Nasdaq was a little, the Nasdaq and the Russell today, even though I don't cover the Russell, operated very differently than SP 500 and the Dow, especially the Dow today. The Dow was really weird. The Dow was down the whole day for it. But anyways, Nasdaq had a nice positive day over here. So starting off what we had for it, we actually had the overnight trade, the overnight fib setup. So from the low to the high right there, because as you can see, there was the high, never had come back, hit 38 till it got it right there. So we got right there, 61.8. Went down right off to 76.4 and right off for a nice little win right there from the previous day's Fibonacci levels. Then when we started off the day, we were looking at going to the downward move on the day, because the move is down. As you can see, it's making lower lows. So the bias for us is we're only looking for shorts, because the best thing you can do is trade with momentum. I never want to go against it, so I always try to trade with it. So since we're making lower lows, the bias is towards the downside for it. So here is one right here. We're pricing up to 38, never took out the 23.6. Hit this 61.8 and then came right there and closed that trade out right there for it. But then as you can see, the price started changing for it. We started making a measured move right here, or an ABCD move is what is making ABCD. Just draw right here. A, real easy to see right there. C, and then the D was all the way up there pretty much. So once it broke this level right here where the market opened at 5 p.m. Central the day before, once it broke that, now the bias is to the upside since we just took out the high of the day right there. So we switched from looking for shorts only to look for longs. So we go down for our anchor level down here at the very bottom low of the day and we start looking for longs for it, and we get a nice one right over here. Here we got in at 38, never hit the 23.6, came down, hit the 61.8 right off of it. And again, I tried to get in earlier, and I tried getting earlier for my first contract. I get in, you can get in anywhere, you know, outside after the 38% line hits. But once I get in with that first one, say I got in with that 30%, then I'll usually get in a little earlier than the next level, or I'm looking at the 61.8, just because price doesn't always go down to 100% and reach always to the fib level. You can come down very close to it, sometimes even 10, maybe 12% away from it I've seen before. So that's why I always try to have my entries slightly below it, anywhere from about 10 to 12% away. And how I measure it is from the whatever levels I'm looking for right there. So like 61.8 to the 38.2% Fibonacci retracement. So there's 351 ticks in between there. So 10% of that is 35. So I'd just go up a little bit more. It's about 40 or 45 ticks, and have that be my entry right over there. So I did get 28.93. Let's see where that is. That was only about 27 ticks. So really, I should have, if I really want to be safe, should have got in about right there at 28.9650, and then get it about 10% earlier for it. So again, about a little over 45 ticks would have been about right there for it. I got at 29.52.75, and so I actually got out earlier than what that was for it. But hey, that's fine as well. It's about halfway between the 38% and 447%. Usually pretty safe right there, getting out right there from it. So for a nice little gain right there. And then that is it for the Nasdaq. Those are only trades I had for it today. We will not be taking the Fibonacci retracement trade from the previous days, because this was it right here. That was from the low, that's from the high. If this had gone up right here and just ticked one tick higher than this one right here, then it would be a valid trade setup going to the next day, but it's not. So we will continue looking to see what's going to happen in Nasdaq. As you can see, Nasdaq has been in a nice trend right here. It's still in that trend channel that we were talking about yesterday. See if you go just about right there, and trend channels are very subjective depending on who's ever drawn it, but as you can see, just like a nice little trend channel going up right there. So we'll see if price comes back down, gets somewhere around these levels. We'll see what happens tomorrow, if it will rally back up again from hitting those. But if not, and price continues to go down, then we do still have these areas. These are fib level areas from previous days that had not been hit yet. So that would be our next entry going in for the Nasdaq tomorrow. So that's the recap, the range conditions, the negative momentum in the S&P, but the positive momentum in the Nasdaq, and just the standard ES and NQ still doing its job. So subscribe for the daily process, and remember, trade, plan, and execute. Thanks.